Hey guys, so in this video, I'll be sharing with you my market analysis for the US stock market for the week of May 8 to May 12. Alright, so we'll take a look at the main indexes. So we'll take a look at the S&P 500, the Dow Jones, the Nasdaq, and the Russell 2000. So we'll begin with the S&P 500 over here. So as you can see, we are currently trading in a range. So the range is bounded by the upper green rectangle and the bottom green rectangle. So you can see that in the past couple of weeks and months, we have actually tested this upper green rectangular box or the resistance, but the S&P 500 is still unable to break above this level, right? So the first test was back in around February, and then you can see the most recent test was in April and also in May, right? So for the last week, let's take a look at the price action. So we can see that as the S&P 500 makes its way to the resistance level over here at the price level of around $415, it encountered resistance and it fell back down. For those people who are long the S&P 500, when it tried to break above this level, most of them will get stop out if they have a tight stop loss, right? So you can see that in the subsequent days, we have red days, and then we also had a gap down over here. But we managed to close Friday on a positive note, right? So you can see that S&P 500 get back up, but you can see that it did so on lower volume, right? So that's something to pay attention to moving forward. The next thing that we want to take a look at is for the S&P 500 to continue on its uptrend. So right now we can see that the S&P 500 is in an uptrend, right? So based on technical price action, so it's above the 50-day moving average and the 200-day moving average. The S&P 500 has been making higher lows and higher highs, right? So this was the first low, then this was another low, this was another low. So you can see that subsequent lows have always been higher than the previous one, and it also been making higher highs. So here was the first high, then it made a second high over here, which was higher than the first one. But in the most recent one, it encountered some issue breaking above this level, right? So for the S&P 500 to continue its momentum and its uptrend, we want to see the S&P 500 breaking above this level. So you can expect that there will be a bit of turbulence at this area because this is a area of resistance. So that's something to pay attention to for the S&P 500 moving forward. So next one we'll take a look at is the Dow Jones. Right, so the Dow Jones has also been trading sideways, right? So while it's been trading above the 50-day moving average and the 200-day moving average, the price action of the Dow Jones is not that positive, because you can see that it also experienced a gap down on Thursday before it managed to close back up on Friday, right? So that's for the Dow Jones. The next one we'll take a look at is the Nasdaq. Right, so the Nasdaq has been a bit more positive compared to the S&P 500 and the Dow Jones. Reason being is that the Nasdaq has broken above this area of resistance over here, indicated by this red line. So you can see that it managed to break above this level and hold above the level, right? So you can see that it break above the level over here, then it traded sideways, then it fell back, but it managed to find support at the level over here and went back up, right? So you can see that over here, another thing to pay attention to is that while the price action has been declining on a couple of days, right? So we have 1 day, 2 day, 3 day. You can see that it declines slowly, but on Friday it managed to reclaim all of the losses that it made in the past 3 days. So that's positive action that we're going to see in terms of price action when it comes to an uptrend, right? So in an uptrend, we want to see prices declining slowly and then rising up or rallying up on quick speed and in greater magnitude, right? So that's for the Nasdaq. Then now let's take a look at the IWM. So it's the Russell 2000. For the Russell 2000, it mainly focuses on small to mid caps, right? So for small and mid caps, you can see that it has been underperforming the broader market compared to, let's say, the S&P 500 or the Nasdaq. So over here, we see that the Russell 2000 or the IWM is below both its 50-day moving average and the 200-day moving average. So it still puts it in a downtrend. And then prices have not managed to make higher lows and higher highs. So we can see that in this rally, that the smaller cap and medium cap stocks are underperforming the larger cap, right? So you can, if you have been following the markets, you know that a lot of the price action of the overall market indexes has been supported by the big caps, right? So you have your Nvidia, you have your Microsoft, your Meta, and so on, right? So it's all of the larger cap stocks that are performing better, right? So that's for a bit of the price action for the major indexes. Now let's take a look at the breadth of the market. right? So for the breadth of the market, for last week, for the number of stocks above the 50-day moving average, we have 1,898, and then 2,037 for stocks above the 200-day moving average, right? So what this means is that there are 2,037 stocks in the New York Stock Exchange that is trading above the 200-day moving average. Ideally, in an uptrend, right, we want to see this number increasing week over week, right? So this shows that there's a greater participation of stocks in an uptrend. And the greater the participation and the breadth of the market, the more sustainable the rally is, right? So the next thing that we'll take a look at is the 52-week new highs, right? So over here, we have 41 and we have 38. So 41 stocks make new highs, make 52-week new highs last week compared to 38 that make new lows, right? So that gives us a net highs or new high, new lows number of 3, right? So we simply take 41 minus 38, we get 3. So if you take a look at the data over here for the new highs and new lows, right? You see that this has been fluctuating and moving sideways for quite a while. Right, you see for the past 5 weeks or so, the net new highs, new lows has been moving sideways. For the rally to be sustainable and in a confirmed rally, right, we want to see this net new high, new lows being positive and increasing week over week. But right now we are not seeing that, so that's one of the reasons why I'm not bringing my exposure to the market at a high level just yet. So I'm being quite defensive right now, even though I'm still having like pilot positions in the market. So that's for the NYSE. So you can see also over here, the percentage of stocks above 200-day moving average and above the 50-day moving average, right? So right now we are hovering at the halfway level. It's a positive sign, but we still can see improvement from it. Then the next one is the Nasdaq. All right, so the Nasdaq, we have 1,532 stocks above the 50-day moving average and 1,325 stocks above the 200-day moving average. So that's the number. So to have a greater clarity of what these numbers mean or greater context, we have to compare into the previous weeks, right? So you see over here, for the 50-day moving average, it's actually been increasing, generally increasing throughout the past 8 weeks or so, or 2 months. Then for the 200-day moving average, the number of stocks above the 200-day moving average is actually trading sideways. And then for the new high, new lows, generally it has been increasing. So that's a positive sign that we want to continue to see on the Nasdaq, right? Then over here, we have the performance of the overall indexes in the past week, right? So you can see that to summarize, the S&P 500 is above its 50 and 200-day moving average. The same goes for the Dow Jones and the Nasdaq. The only underperforming one which we highlighted earlier on is the Russell 2000, right? So we see that the Russell 2000 is trading both below its 50-day moving average and 200-day moving average. And the next thing that we'll take a look at is the advanced decline line, right? So over here, if let's say we click on the link, right, it will take you over here. So we are taking a look at the S&P 500, the Dow Jones and the Nasdaq. So the advanced decline line is over here. So you can see that actually the advanced decline line has been making lower high and lower low, right? So if you compare over here, and then over here, it's actually making lower highs, and then this low is slightly lower than this low. So the S&P 500 is actually making lower highs and lower lows for its advanced decline line. The same goes for the Dow Jones and for the Nasdaq, right? So what the advanced decline line shows us is it compares the number of stocks advancing versus the number of stocks declining, right? So ideally, we want to see the advanced decline line making higher highs and higher lows. But as you can see right now, all three main indexes, the S&P 500, the Dow Jones, and the Nasdaq, is recording lower highs and lower lows, right? So if we take a look at just the market breadth, right, we know that we see that the market breadth itself for the overall stock market or the overall US stock market is not great just yet. And that is why, for me personally, I'm not increasing my exposure to the markets so quickly just yet, right? Because even though the price action of the indexes has been still relatively okay and fine, but the market breadth is not supporting my confirmation, right? So based on the market breadth, what I'm doing is I'm taking my progressive exposure slowly exposing myself to the market only if my trades have been working. Right, so there's an update for my market analysis for this week. Hopefully you have enjoyed and learned something from this video. If you did, smash the like button because it really helped the channel grow and allow me to produce more content such as this. I'll see you in the other video to your financial success.